Hi guys, welcome back to HBRIGHT. In this brief video, I want to address something rather pernicious, which I have seen in the traditional and online media about how the economy functions during times of hardship. Following any downturn, media commentators are desperate to find signs that markets are stabilising and trending upwards towards economic recovery. Many focus on the stock markets, particularly the Dow and the S&P 500, and try to draw parallels between changes in stock prices and the temperature or condition of the economy. Indeed, YouTube is a good place to find these kinds of comparisons, particularly where financial advice is sought by viewers who are themselves looking for reassurance that it is safe enough to return to the Wall Street chase and begin investing in stocks again. Now, the problem with looking to the stock markets for a feel of the state of all of our livelihoods is, as the notable American economist Paul Krugman puts it, the stock market is not the economy. The driving forces of the economy are well understood. In essence, it's aggregated demand versus aggregated supply. Think of consumer spending, government spending, investment, exports, etc. being balanced by the volume of goods and services able to be produced in a given country. If all economic activity sharply falls, growth falls, unemployment inevitably rises, and governments are called to take drastic action. Now, this is pretty straightforward, but stock markets are a complete mystery. Stocks often do not even reflect the underlying companies that issue them. People buy them more often in hope and expectation than with any reason or foresight. And this is the problem. Stocks rise and fall for reasons which are totally unconnected to regular people's lives. So when you see stocks go up and people scramble to buy them, all you are seeing is a case of the blind leading the blind, or possibly even the charismatic confidence tricksters leading the naive wish thinkers. Now, sometimes media commentators simply come from a place of ignorance and financial illiteracy. And as they say, ignorance is not a crime. But others do know better and are dishonestly spinning the truth so as to promote their own stakes and interests in the market. The US President Donald Trump has frequently mentioned the stock market during his press briefings, and I will leave it with you to ponder his reasons for doing this. This all brings us back to the art of fact-checking and critical thinking. It reminds me of a quote: "Truth is like poetry, and people hate poetry. Nevertheless, despite the extra effort, we all need to be questioning incongruous assertions and extraordinary claims for the all too familiar BS. The economy is not the stock market. If you really want to feel for whether things are getting better, you are much better off looking at standard economic indicators such as unemployment figures and the rate of inflation. Do not be fooled by those who tell you that stocks are up, therefore you need to be jumping in to avoid missing out. The economy runs on regular, hard-working people, and it will be entirely down to them as to whether things return to normal, not the stock market." Thanks for watching. If you enjoyed this video, please feel free to leave a like and to hit that subscribe button. And until the next time, stay sharp, stay hungry, and stay cash bright.